Good evening, everybody. I'll babble here for a few minutes because I apparently put the password in wrong. Now we're getting people coming in. So, but somebody said they even got in on the wrong password. So, I guess the password doesn't do. All right, so I'm going to hem and haw here for a few minutes. Looks like we still got people logging in. But what I guess I can start illustrating is the, excuse me, at least Jim will have the recording. What was the right password? Bigalow 24. So, okay. So today you could basically say observe the obvious. And the obvious was, where do most people sell? They panic sell at the bottom. So this is just kind of a truism of of human nature. And this is also a truism of identifying when you've got a possible reversal in a market. So one of the common questions today was, why is the market going up with all the bad news about war starting? And the answer is, sell on rumor, buy on the fact. Or in an uptrend, you buy on rumor, sell on the news. So to illustrate, how many times have you seen a stock go up into earnings, and then they come out with great earnings and the stock sells off dramatically? That's because everybody was ready to buy, anticipating of good earnings, and when the good earnings came out, there was nothing else to look forward to, so that's when you take profits. So you'll often hear me say, if you see things gapping up in the overbought condition, beware of selling. If you see things gapping down in the oversold area, that's that exuberant selling at the bottom. Get ready to start taking profits if you're short, and if you want to be aggressive, start going long. You saw that over here. After a downtrend, they opened it lower, they took it down big. That gap down was the alert to start watching for a reversal. Today's gap down was the alert. So bad news, a war starting in Ukraine. Well, everybody knew that. So after the initial selling, that's where investor sentiment starts changing. We saw the same thing over here in the NASDAQ, except it was more resilient. Notice over here, they gapped it down, brought it back up. That was kind of the area they started basing. Gap down, and notice what happened after they opened much lower. There was absolutely no selling after that. The buying came back up. So this allows me, I don't know, a frog in my throat, allows me to do a promo segue. We're going to be doing our mini spotlight training on Saturday. And they're scheduled for 1 hour, but they usually go for 2 hours. But the reason we have narrowed it down to one signal, the bullish and bearish engulfing signals, is not so much that you're going to be visually able to identify the signals, which is what you're going to be able to do in a matter of 2 or 3 minutes. But what we want to go into after that is where do these signals occur and what becomes the criteria for them being a confirmed reversal signal. So the training is not going to be so much just identifying the signal itself, but understanding the psychology and the confirming indicators that would tell you that that reversal has occurred. Now, getting ready for that training session, excuse me, hold on, I need to wet my whistle here. I was going to have to go back and find charts that showed good bullish and bearish engulfing signals. But that was kind of alleviated today because there was a massive number of bullish engulfing signals excuse me, forming today. So Saturday is going to be going into what makes that a good reversal signal versus it just being the signal itself. And there was a ton of them today, so I'm not even going to try to go through them all. And this is why we look at this is why we go through the or use the candlestick signals as our ABCs for our analysis, because they are the true indicators of what's going on in investor sentiment. So there was not a few of these today. There was a ton of them. I've probably written down 30 or 40 that have provided strong reversal signals. So like any other candlestick signal, this is fuel cell. Which ones out of hundreds of bullish engulfing signals today are going to be the ones that have the most probabilities of heading higher? What things like a bobble breakout would add to our probabilities that that's a reversal signal? So I'm going to go through, well, let's see, I'm going to go through things that stayed strong. GOGL, which has been a good strong trend, but notice where it closed today. After gapping down, which would have made everything kind of worrisome, it finally closed back up above the T-line. That tells you to stay long. So this is why knowing what a signal and what the T-line is telling you allows you to have a much more defined strategy as far as what you do with your positions. If you stayed long on this position because it closed back up above the T-line, that was the right thing to do. But what is our criteria for staying long now? It needs to open positive and trade positive, staying above the T-line. If it opened lower and started trading lower, I'd close it out. Tells me that force is still in progress. SYY opened lower today, but closed back up above the T-line. So what's this whole pattern implying? Pretty much implying that after we had that belt hold signal, confirming our fry pan bottom, what is our rule about a fry pan bottom? When it breaks out, you can stay long as it doesn't close below the T-line. Now SBSW kind of did a meeting line in the overbought area. Meeting line is basically they open it here, close it here. They gap up and close it right about the same place they opened it before, telling you that the sellers might be taking control. So what's your strategy on this one if you're long? It has to open positive and trade positive. If it opens lower, more than likely they're coming back down to test the T-line. Wasn't today a bit more of a belt hold signal? Oh, a bit more of a belt hold signal? I don't know whether you would call it a bit more. but this is kind of a belt hold piercing signal in the NASDAQ. Now the other ones, like the Dow, that was really, this is your only non-signal in the indexes. It's not a hammer signal. Now here's the conundrum. Had it closed right here as a high, that would have been a hammer signal. Remember what the definition of a hammer signal is. The tail should be 2 times greater than the body. Well, this is actually bullish, meaning we can see there was buying, but it's not a reversal signal. So would we count that as a reversal? Well, when you add it up with the other indexes, there's kind of your belt hold piercing signal on the S&P 500. And there's your bullish engulfing signal on your transportation index. So you've got the indexes, all, or the other indexes, the NASDAQ, the S&P 500, and the transportation, all showing good reversal signals. Even though the Dow didn't do a reversal signal, you just kind of have to add that into the mix of saying, well, they're buying everything, just there wasn't a buy signal in the Dow. So the important illustration today is when they gap this down, something is wrong with this. When they gap this down and took it down, that gap down should have been your alert to start watching for a reversal. HYG as a bond indicator, there's your bullish engulfing piercing type signal. And the other aspect of candlestick analysis is the bigger the signal, the more compelling there's been a change of investor sentiment. However, remember what we need for confirmation tomorrow. We need to see everything open positive. The market's open positive. And staying above the T-line. What if today we have bullish engulfing today and tomorrow opens lower but closes higher? Does that mean indecision? No. It means if they open this here and then take it back up, it's confirming that the bulls are taking control. You'd like to see it open higher and trade higher, but remember, you're going to be able to see the color of the candle. If they opened it down here, I wouldn't be doing anything with this. But if it started coming back up and coming back up through this level, what's it telling us? It's telling us the bulls are in control. Okay, so there were a lot of charts that looked like this. They gapped down, so there is a good place to stop out. If you didn't take profits right here, you definitely didn't want to see it come back up through the open. Again, because of the alert of the gap down. I'm going to go through a bunch of these. Opened here and immediately started trading higher. That's where your safety stop should have been. Or, worst case scenario, that's where your safety stop should have been. Now, what is the assumption at this point? James, it could be. This could be a bounce. So that was exactly what I was going to illustrate here. Where do you think the first likely target is going to be? Back up to test to see what's going to happen at the T-line. So we know that there's probably a bounce on a confirmed buy signal or confirming the bullish engulfing signals. But we need to see, so if I was buying tomorrow, I would definitely want to see what it does once it gets to the T-line. So does that mean if you closed out these positions, say you closed out your short position right here, are they still shorts? Don't know right now. If it opened at the T-line and traded back down, that would tell me they failed on that bounce. Stochastic still heading down. If a stop at the close yesterday on Roblex, doesn't that mean a maximum loss for the day? Doesn't that mean a maximum loss? Yeah. For the close, you mean a maximum loss. If you were short, it opened here and came back up through this level, you would have, no, you wouldn't, well, you would have, no, you wouldn't have lost any money on the day because it would have been the same level as where it closed yesterday. All it meant was that you didn't take the profits here, you took your profits at that level. Where was the stop? The initial stop, if you were aggressive, would have been at the close of the previous day. Because if it opened here and came back up through this level, what's that kind of telling you, especially in the oversold area? The bulls are starting to take control. If you didn't stop out here, where was the next logical stop? It was right here at the previous day's open. Because if it comes up through there, well, now what do you have? You got a bullish engulfing signal. A belt hold, haven't you been around enough to know what a belt hold is? A belt hold is when they gap way out of the trading range and they come back into the trading range. Now this is what we would consider a bearish belt hold, pierce, or a dark cloud. So tomorrow's close is key to the direction of the next few days. James, I would think that the logical place for a bounce is back up to the T-line. I guess I'm confused about belt hold. HYG has that, but also traded below the trading range and then came back up into the range. Isn't that a belt hold? Yes, you can have a belt hold. If it closed right here, it'd be a belt hold. If it closed more than halfway up this candle but below where it closed, that would be a piercing signal. And if it closed up here, now you have a belt hold bullish engulfing signal. So the belt hold is identified by the fact that it gapped way out of the trading range and came back up. Yes, WB, if you were short, that was the whole point of this. If you were short, based upon this downtrend, and it gapped down, remember the gap down is our first alert to tell us to start watching for a reversal. Where would be the first spot to tell us the bulls are stepping in? If it came back up through the previous day's close. What's a real strong reversal signal? When they come up through the previous day's open. Stochastics are 1233. So these can be considered belt holds and bullish engulfing. It doesn't matter what you call it. It's just as long as they're illustrating that there's been a change of investor sentiment. When you say a belt hold gaps down out of the trading range, you mean the trading range of the past 2 weeks? No, just the trading range. Just where you can see where the kind of the trading range is, right in here. And they've gapped it way down below the trading range and brought it back up. Trying to think of how I'll come across some more. So anyways, this is what we're going to be going into over the weekend, is identifying, in this case, the bullish engulfing signals. And where, there is something severely wrong tonight. I don't know what it is. Where the bullish engulfing signals occur, or where the bearish engulfing signals occur. So you can see on Chewy, there's a bullish engulfing signal in the oversold area. High probability there's an uptrend. There's your bearish engulfing signal in the overbought area with a close below the T-line in the 50. Told you had a high probability you were in a downtrend. Okay, so there was a bunch that you could have closed out today on your short positions when they opened lower and started coming back up. Let's see. There's kind of your belt hold, bullish engulfing. So if it gapped down here and you started seeing it move back up, if you were short, maybe taking off half the position. If it kind of waffled in here, you were all right. If it came back up through this level, you closed out the other half a position. So when does a downtrend start? You have a bearish engulfing signal. When does the downtrend probably end? When you have a bullish engulfing signal. So this just happened to work out nicely. You can see what happened to net. Gap down, came back up through this level. Now has a big engulfing signal. Basically closed right near the 50-day moving average. Why do you use the 34 EMA? Because anything we put on our chart, we could take everything off the chart, use the stochastics. Why take everything off the chart? Because the big criteria is the sell signals or the buy signals or the pattern breakouts. Then the most refined or the most accurate indicator is the T-line, the 8 exponential moving average. Now, the reason we put the 50 and the 200 on our chart is because that's where all the major money managers make their decisions as far as their positions. The reason you can put the 34 on there is because it works reasonably well, which now we go backwards and say, what can we add to our chart that enhances the probabilities that a reversal is occurring at a specific level? And the 34 works reasonably well enough to have it on there. Now, as you can see, I hope this isn't a confusing chart. You don't have that many support and resistance levels that you really have to be concerned with. The important information is right here at the signal. So, John, if somebody says, oh, put the XYZ indicator on your chart, if you put it on and after a few weeks it's not doing anything for you, take it back off. The reason I try to keep the charts as simple as possible is because this is the important information, the signals themselves. Jay, yes, when everything gapped down, I think we even discussed this, what is today? Tuesday night. Saying if If we saw things gap down well into the oversold area, that's time to start taking profits if you're short. Now, if you want to see if they're going to continue to take it down further, maybe you take out half the position. But the important piece of information that you should have had in your analysis is when they gapped everything down in the oversold area, that was a good time to start thinking about watching for a reversal. Yesterday on net, let's see. Yesterday on net did not open below the doji. Well, yeah, but it didn't show that it was changing direction just yet. So where was the logical stop on if it closed here? You didn't want to see it close back up above this level. Well, they took it up, and why would you stay short even though they were taking it up a little bit? Because your stochastics weren't in the oversold area just yet. Then they gapped it down and then started bringing it back up. Now, this also came back up because I think they announced they had bought a cloud company. On February 24th daily, you mentioned the 3T line and the black 8T line. Oh, on the green line, is the green line the 34, the little gray line here, yes. The 34 is this gray line. Oops, got to answer the questions here. Let's see. How does that differ from the T-line rule? Oh, on February 24, you mentioned the 3T line. The 3T line works in conjunction with the T-line. It's got two elements that help you. One, if you see that they have come up and they've closed above the T-line on the candle, and the 3T line comes up through the T-line, that's little added confirmation. If you see buying and they haven't closed the 3T line up above the T-line, that's a good indication that you're not in an uptrend just yet. The other element is, let's see if I can find something, but if you get way too far away from the T-line, then the 3T line becomes more effective for showing you when things are reversing. Yes, stochastic slow 3-3. Hold on, I'll get to Apple. Greg, hold on to your individual ones until I tell Jim to do the double line, because more than likely I will probably address most of these as we go along. Now, what remains a good factor is, look at your bearish kicker signal, and in this case they didn't reverse this one. This one's still on a downtrend, our CVS recommendation. And BPMC, same scenario. It didn't reverse today. Now, even though it did a bullish colored candle, that's not a reversal signal. That's just telling you they traded up after they opened it. You're still in a downtrend. Okay, so the biggies. NVIDIA. There's your piercing signal. Now, that alone is telling you, yeah, it's probably a reversal. But you add the fact that it did it right here on the 200, that becomes a little bit more compelling that that's going to be a reversal, especially if they open up positive tomorrow. Now, Netflix, up until today, you could see they could never get it back up above the T-line. Now you have a big bullish reversal signal. So what are your elements looking at this chart? One, they closed it right here at the T-line doing a bullish engulfing signal in the oversold area. if they open up positive, it's breaking this downtrend and the T-line. Number one. And number two, where did the buying start? Right about the same level they bottomed it out before. So again, this is a major advantage of the visuals of Candlestick, is that you can see where the buying is, what the signals are, what indicators are breaking, and what happened in the recent past. Amazon. Big piercing signal. Same scenario. Look where the buying started. Right about where the buying started before. No, SP. A piercing signal is one of your 12 major signals. The engulfing signal is one of your 12 major signals. So it's not that one's stronger than the other. They both illustrate there's a change of investor sentiment. But both need confirmation. Is that a daily chart you show? Yeah, Mark, these are all daily charts. But candlestick charts look just the same no matter what time frame you're looking at. Here's a 15-minute chart. If you like to trade intraday, or you're getting a little bit more spicy, you use a 10-minute chart. So I trade commodities during the day. So you can see what's happened to soybeans. It's had a nice uptrend until the shooting star signal. Now it's still trading up after hours. The one I missed because I was making some good profits on short positions is the wheat trade. Look at your doji sandwich. So the chart on a wheat chart looks just the same as if you were looking at an apple chart or whatever other food item you want to look at. So you can see the massive move because of the Ukrainian crisis. And you can see the dumpling top in cattle. Where do you think the next likely target is for live cattle? Probably back down to this level, which kind of coincides with the 200-day moving average. What is the best time frame chart to use for short-term intraday trading? I use a 1-minute, 5-minute, 10-minute, and I set stops slightly below the 10-minute, but sometimes price spikes below the 10-minute. I get stopped out, then the price goes higher. Mike, if you get stopped out on a price, let me see if there's anything here. If you went short and you got stopped out, when it came back down through the T-line, I told you they're still selling. So there's going to be a lot of times when you get stopped out. And I want to see what the chart tells me. So if I thought the downtrend was in progress and I got stopped out because it looked like they could be bouncing it, but then the next few sessions said, nope, they're not bouncing it, you can get back in. Which one of the books would be good for someone that has been in the market for a long time? The High Profit Candlestick Patterns, the green covered one, John. Food, Darren, I was just making a joke because we were looking at the wheat chart and then comparing it to apple. Oh, okay. All right. And Tesla. Whoops. That's the 10-minute chart. There is your piercing signal. So does this that necessarily mean the downtrend is over? Well, now at least you have a format to work off of. If this starts trading them higher, what do we want to see? If they can get up through the 200 and the T-line. If they fail at that level, that means you're still in a downtrend. You could re-short it. Did I do Apple? Observe the obvious. This is a belt hold. Look where they belt hold opened. Basically right here on the 200 and then came back up. So what would we expect to happen? If they open this positive, you want to watch to see what happens when it gets to the 200. Is USO a signal? Probably not. Oops, that could be. That's your bearish belt hold signal. Oh, for crying out loud. J. So now you can see what's happened. They took crude oil up today and brought it back down. Not good. Except now after hours they're taking it back up again. So it still tells you your uptrend's in progress. I would like to see a lot of volume. On what? Volume doesn't mean anything. You're not buying volume, you're buying price. A lot of people say, oh, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If you have a stock that everybody wants and nobody's willing to sell, you're going to go up on lower volume. Now, when it does become more effective is, let me find one that has a good reversal to it. I'll just use one of the. If on this day there was a huge volume spike well above normal, yeah, that doesn't mean you're buying it because of the huge volume spike. The huge volume spike just adds more confirmation that that there's been a major change of ownership. Yeah, so volume is not your primary indicator. The signal is your primary indicator. If it breaks through the T-line, breaks through the 50, stochastic's coming up, and if volume is big, that's just another little cog in the wheel that says there's probably been a major change of ownership. Let me see if I've got some charts here that look good. So there's a kind of a breakout with your best friend signal on radius. So that's, look at your doji best friend breakout. That implies there's probably going to be more upside. If you are targeting resistance profit targets, profit levels, would a chart selection be best if the T-line cross occurs above the 50 and the 50 above the 200? No, we're not trading the moving averages. The most important indicator is the T-line. Then everything else is further confirmation. You don't need to see moving averages cross each other. Now, there was one that we just looked at where it looked like it could be coming back to the 200 and the T-line only because they're at the same levels. But crossing moving averages don't mean anything. All it means to you as a candlestick investor is if I see a buy signal and it's closing above the T-line and the 50 and the 200 are crossing, well, the 50 and the 200 are crossing isn't your major indicator. It's just adding to the fact that that's where the buying's occurring, just gives you additional confirmation. Mark, hold on to your individual ones until we get done with the ones I've seen. When I tell Jim to do the double line, that's when you type in ones that we want to look at specifically. CCJ, bullish engulfing signal. UCC, now I wrote down these early because they were performing early, but I've got a list of probably, let's say, 30 or 40 good charts that we're going to be looking at on Saturday that indicate which ones have the best potential of upside. This is a fry pan bottom. I think Marshall pointed this one out today. And look where the fry pan bottom confirmed, right here at the 50 at the breakout level. Winston, if you're trading off the 1 minute and 3 minute, it means you're trading real fast, or in and out quite a bit. Experiment with your 5 minute and your 10 minute. But you might not get whipsawed trading the 1 minute and 3 minute if it's still confirming that it's staying above the 10 minute. I use the 10 minute as my bellwether. And if I get ready to buy, I check my 5 minute to make sure the 10 minute is still heading in the right direction. Radius. Oh. Yeah, kind of a fry pan bottom, but I'd put it more in the classification of a series of dojis. How many of the software security stocks wouldn't be chasing them given their very strong upward move today? Chris, that's exactly why you want to learn candlestick signals. Is when you see a strong move in a stock or a sector, instead of being hesitant that you don't want to be chasing something, if you can identify that that signal or pattern breakout was exactly that, that tells you, yes, you want to be buying it because that was showing that there was new strength in that position. So when do you buy all these bullish engulfing signals? When they cross the T-line today? No. I would want bullish confirmation tomorrow. Carrie, no. If you're buying something based upon a confirmation, if you're buying this one tomorrow on positive trading confirming the piercing signal, first of all, you probably wouldn't want to see it close back below this level. 2, you're going to be a little bit more diligent watching to see what happens once it gets to the T-line, which probably tomorrow would be the same level as the 200. Or if you want to be more conservative, you wait to see when it does close above the T-line, then you can start buying it. Yeah, so these are all based upon what your aggressive or whether you want to be aggressive or conservative. If I was going to be aggressive, I'd buy on positive trading tomorrow and then be diligent as far as watching my 10-minute chart to see what was happening once it got to those levels. EVH. Now that's a kicker signal. So this is one of the things that we teach as far as using the top rank signals and patterns, which there's about 15 of them. And the kicker signal is the strongest candlestick reversal signal as far as an individual candlestick signal. Basically, it tells you the investor sentiment has been kicked in the opposite direction. And we noticed, or we pointed out SP XU, when they gapped up and they started trading it lower, just very simple stop loss or profit taking technique. As long as it didn't come back down through that level, you were all right. As soon as it came down through that level, you stop out, because that means definitely the bears are in control. Maps, kind of a little mini kicker signal. Another one that you could be buying based upon that gap up through the T line, through the 50. If it opens positive, you basically have a bobble breakout. So the kicker signal itself is strong, and the fact that they went through resistance levels makes it more compelling that the bulls have taken control. Look what happened on skin. The market opened down huge today. This opened and confirmed the kicker signal. Remember, the kicker signal is telling you there's been a drastic change of investor sentiment in spite of what the overall market is doing. So the kicker signal has two aspects to it. One, it doesn't matter where the stochastics are when you see a kicker signal. And two, it's usually not going to be affected by what the overall market trend is doing. And you can see what happened on this kicker signal. So does this look familiar? Pretty much what your EVH looks like. So this one you'll probably see on the recommended list tonight if it opens positive. But on SPXU, when the bears on that symbol are in control, the bulls on the S&P 500 are in control. Okay, so apparently SPXU is the short, yes, exactly, the inverse fund. Okay, let's see what else we got here. Oh, here's one that people were following in the chat room. Observe the obvious. You're in an uptrend, there's your best friend signal. Gap up, best friend signal. What happened to an observable resistance level? Failed, and then did a doji again the next day. If I was long, I would have probably taken off at least half the position here. In the getting toward the overbought area, what was it telling us about the 50? Telling us having a hard time getting through that level. And if you're looking at the overall market, which was doing this, that's probably a good indication to say, well, maybe we should close out this position. I forget which one we were just looking at. So the market was selling off. This was failing at the 50-day moving average. That was probably a good place to take some profits. And when would you be buying? If it came back up through the 50. JD, opening positive is kind of a general statement. Now on this one, because it's a kicker signal, if it opened here, wouldn't buy it. But as soon as it came back up through this level, I'd be a buyer. If it opens positive and starts trading positive, I'd be a buyer. If the market, pre-market futures showed that the whole market was going to open down 250 points on the Dow and 70 points on the NASDAQ, and this opened lower, yeah, I wouldn't jump in until I saw bullish confirmation. Carry, no, not really. Because did it do a strong sell signal today? Not really. Now, if it had closed down here, yeah, that may have been more illustrative of a sell signal. So I'm not, just because you see something reverse doesn't necessarily mean it's going to be your best short. And we're just about ready to get to that area here in a second. Lulu is another one that if you were in a downtrend and a gap down and started seeing a trade positive, close out half the position, then you might have closed out the rest of the position later in the day. A lot of people following DWAC. Notice where it closed. Back up above the T-line. Would I be buying this one yet? No, I'd want to see more confirmation. If I was long, yeah, I would stay long as they can't close it below the T-line. This is something more that I would short. Whether you had your bearish best friend and they sold it off hard. And notice what happened in lots of charts today. They opened lower and traded higher. Even though some of them didn't come back up to where they were trading positive, they were trading above where they opened. This one was a different illustration. They opened this and traded lower. That one I'd be more apt to go short. That's telling me there's bearish strength after the bearish best friend. Same scenario here on Philip Morris. There's your Doji Harami bearish confirmation closed below the T-line. Where do you think the next target was going to be? Probably the 50-day moving average. Still lots of downward room in the stochastics. If they go through the 50, then they're probably heading for the 200. These are the type of charts you want to find, where they're rolling over, you got, and then they get slammed. Wow, that was a big move to the downside. So the reason you want to identify patterns, you can see where this one failed. A shooting star closed below the T-line, tried to come back up. Right in there, you can start saying, well, they're not going up. They're starting to dumpling top. Now, do all of these charts do this type of move? Definitely not. But if you're shorting this, the probabilities of being in something like this is extremely good. I say extremely good. Much better than just a drifting position heading lower. Should say that differently. A position drifting lower. MET-C, bearish kicker signal, closed here at the 50. If they trade this lower tomorrow, where do you think the next target is going to be? Probably somewhere in this range or to the 200. Herbalife, you can see the evening star signal gap down. Again, puts you in positions where the probabilities are pretty strong. That it's either in a downtrend or could possibly be in a strong downtrend. Any good scanners based on candlesticks? Alan, a bunch of them. I use, for my scanning, I use Metastock, and Metastock has a lot of our formulas. You can buy the package and just put the formulas downloaded onto their scanning, and it will identify the signals and patterns for you. And not only identify them, but they'll show you the signal or pattern, and then you click on the signal and it will bring up a box to describe that signal. And then TC2000 also is a good scanning software. Metastock has a little bit more advantage because it can scan all stocks, meaning all markets, Canadian, European, Asian, currencies, commodities, whereas TC2000 is just strictly U.S. stocks. And this one actually, after hours, closed below the T-line. So you might start watching for going short on this one. Anyways, the whole, this is something that you really want to keep in your mind. As soon as you see a gap down and they start trading it lower, even if this was something you were trading, when they gap it down and start trading it lower, if you flip to your 10-minute chart, you can start seeing whether they're selling it off or whether they're starting to come back. All right, so the big movers today, I'd say the big movers, the big obvious signals today look what your signal would do here on your 10-minute chart. There's your 10-minute chart belt hold, which created this type of signal. So this just happened. Nah, it didn't happen by chance. When we set up our bullish and bearish engulfing signal session, I think we did it about 6 weeks ago, I kind of planned that we'd have a big day where we'd have a lot of bullish and bearish engulfing signals. So that's why you saw them today. But what we are more interested in doing on identifying the signals and then showing the things that are going to confirm and make it a much stronger reversal signal based upon confirmation. Okay, so with that, is there any general questions on candlesticks? Yes, so you can, it's very easy to put in the formula for a kicker signal or a doji in the oversold area or a bullish engulfing signal. And then when you update your charts, all you do is click on them. When they update, now you have a list of those signal setups. No, Julia. The center candle in a Morningstar be a long green bar. No, that would probably make it a kind of a belt hold type signal. What you're looking for is that little day of indecision and then the bullish candle. Yes. So here's the very logical trade setup. You see a bullish engulfing signal, and it closes right at the T-line. What's the T-line indicator probability factor? If it opens positive, what's it telling us? The T-line, which looked like it's been acting as a resistance level, is now not acting as a resistance level, and it's confirming your signal. So a lot of people say, well, why wouldn't you buy here? Because it's doing a bullish engulfing signal. Couldn't we be ready for that? It could. But what happens if tomorrow they open the market lower and they open this lower? It's not confirming your signal. I have a tough time figuring out when to buy. You mentioned 10-minute, 5-minute. Speedy, yeah, if I was buying on this one tomorrow, I'd be watching my daily chart to see if it's time to buy. If you want to get a little bit more fine-tuned, then you could flip to your 10-minute chart and make sure that it's moving in the right direction. So the buying is not the problem for most people because the trading rule is very simple. Let's see if we can find something else. If you see a buy signal, you want to see it close above the T-line. You could be buying in here because of the buy signal. If you're shorting something, you could be shorting on weakness. That would be confirming your sell signal. You don't have to go to your 10-minute chart to see that they're starting to trade that lower. WB, you watch what your signals are telling you, or what your patterns are telling you. This was potentially a dumpling top. But what would end our dumpling top? A buy signal. Now, if this opened lower and traded down here again, yeah, you can conclude that your dumpling top is still in progress, that your bullish engulfing signal did not confirm. Now, if this opens positive tomorrow and starts trading positive, now what's your dumpling top? It's now more of a double bottom. Same thing with a J-hook pattern that doesn't confirm. It goes up to the same level it topped out before, but does not break through. Now becomes a double top. All right, any other general questions? Somebody was asking how long the session will last on Saturday. They're scheduled for 1 hour. But as you may have seen in some of our sessions, that's never occurs. They usually go on for at least an hour and a half, sometimes 2 hours. But the important factor is that you're not just identifying a signal, but you're understanding what the investor sentiment was or the psychology that created that signal. And that's the important element of candlestick analysis. The mechanics are identifying the signals. The change of your own investor perception or perspective is understanding what those signals represent as far as investor sentiment and where they're occurring. That gives you a much more clear grasp of what's going on in price movement versus listening to somebody's recommendation or thinking the news is going to do something. Like today, there was people saying, well, bad news, the war started. Shouldn't they be selling this market off? Well, that was the news that everybody was expecting. Now it's out. So that comes back to a very simple statement that we always make about candlestick charts. Let the chart tell you what the market is doing, not what you think it should be doing. Okay, I guess, do we need confirmation for bullish engulfing? Yes. For example, apps. Yes. If it opens here and trades here, it didn't. If it opens here and trades down here, it didn't confirm. You need to see bullish confirmation. So you watch trading above the T-line and the 3T line crosses. No, I pay little regard to the 3T line. It's just kind of a fluffy confirming indicator. If this opened positive tomorrow and started trading positive, I'd be buying it. If it came back down and closed near the low and the 3T line didn't get up through the T line, I might say, this better open positive tomorrow. If it opens lower, I'm going to close out the position. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. Whoop. All right, hopefully we got... I'm still can't keep up with the scrolling. So, Adobe. Bullish engulfing. Again, like many of them you're going to see tonight, if they open these positive, you can be buying it. Don't let it close back below the T line. MAF, that one didn't come up. Microsoft is not a very good trader. Not a big percentage mover, but if you like this one, double bottom, bullish engulfing, you can be buying, same scenario. Don't want to see it close back below the T line. MPC, stay short. Nothing here to show any buying coming in. BKD. There's your, I had that one written down, I thought. There's your kind of your bobble breakout J-hook pattern. You can buy this one on positive trading tomorrow. We did skim. That's a kicker signal confirming, stay long. And EVH, you'll probably see on the recommended list tomorrow. If it opens positive, you can be buying this one. Blink. Another setup for a bullish engulfing confirmation, which would give you kind of a bobble breakout, making your next target the 200. And VAX, another belt hold. Oops. Something's going on real slow on this. Nothing here yet. If you were short, you get ready to cover your short if it starts trading positive above the T-line tomorrow. Smegmo, same scenario. If you were short, get ready to cover your short if it opens positive tomorrow. Devon, nothing here of any great consequence. I probably wouldn't be long or short this one. Actually, no direction. Intel, another one you could buy if you like it on positive trading. Baba, nothing yet. If this is going to be a belt hold, it needs to trade positive. Right now, if I was short, I would have stayed short today, but it has to open lower to stay short tomorrow. No, nothing on this one. Roblox. Again, I would have covered the short, which we did today, covered our puts. Now you want to see if it's going to first test the T-line. SUNL, engulfing, that one you can buy on strength. VCell, another strong bullish engulfing buy in strength. Blade, nice one for a bobble breakout. That one I wouldn't be afraid to be buying on positive trading. Natural gas, that's not a good sign. If they open this lower, they're bringing it back down to the T-line. CrowdStrike, big bullish engulfing. Use the 50 as your entry. It should trade back up above that level. Palo Alto, you can buy this bullish engulfing. Upstart, same scenario, kind of a bobble breakout. Oracle, I would have covered the short position. I wouldn't be going long until it gets back up above the T-line. Whoops. This one has to open positive and trade positive to stay in it, SW. If it opens lower, probably anticipating they're coming back to test the T-line. Johnson & Johnson, stay short. If I was short, I'd use today's open as my stop. And Fuel Cell, another good bullish left-right combo, J-hook type setup. You could buy it on strength. You definitely want to see it get through this little resistance area. Gold is in barracks. That's not good. I would have closed out the trade. Gold itself, after the big long-legged doji trading lower, good illustration there's been a change of investor sentiment. United, oh, that's your meeting line type signal or your belt hold type signal. Not a reversal signal. If you were short and it opens positive tomorrow, you'd cover the short, but watch to see what happens at the 50. If it opens lower tomorrow, you stay short. CDE, if you're short, you stay short on this one. If you could be short, oh, you're looking to go long. No, nothing on this chart that would make you want to go long. Another possible meeting line or belt hold. Not quite a meeting line. Another one that if you were short and it opens positive, watch it, see if it's going to bounce to the T line. If it opens lower, stay short. NIO. Uh-oh. Your piercing signal needs to be confirmed. Microsoft, we did. PLTR. Another one that if I was short, I would have covered it today. If you want to go long, you need to see a positive confirmation up through the T line. ZTS, same scenario. I would have probably covered the short position today, double bottom. Wouldn't go long until it gets back up through the T line. AMGN. Stay short, but I'd cover a short position on positive trading tomorrow because of the doji. Bearish belt hold, dark cloud signal on Nugget. Get ready to close this one out. Twitter, I would have covered short positions. You could go long on positive trading and then use the T line as your stop. Can you look at the daily for, oh, okay, INDO, humbug. Good breakout. Mark, all you can do with this, do those two red candle gap, oh, that is a red candle. I'm colorblind. That one is, yeah, if it opened lower tomorrow, get ready to take some profits if you're long. To stay long, you probably want to see it open positive and trade positive. The S&P 500, Matt, that's a belt hold. And the Qs, same scenario. Oh boy, that's not a real great looking chart. If you were short because of the bearish engulfing signal, covered if it trades positive. If you're short, it has to open lower and trade lower to stay in it. AMAT. Another one that if I was short, I would have covered it today. Needs bullish confirmation to go long. Goog. Something is slowing this computer down. Google double bottom with a bullish engulfing. If you like it, you can buy it on positive trading. AMD, piercing signal at the 200. You can buy this one on positive trading. CQP, good breakout, kicker type gap up. Stay long. Cisco. And if I was short, I'd stay short. I wouldn't be going long. That's kind of a nothing chart. Pfizer, stay short, except it did a doji right here near the 200. I would use today's, if I was short, I'd use today's high as a stop. It shouldn't come back up through that level. Nail, another piercing signal, and still need to see confirmation. If you're short, stay short, but if it opens positive, you close it out. HAE, get ready for your J-hook pattern. Q is bullish or bearish tomorrow? Well, you won't know. If they open it positive, they're confirming the belt hold piercing signal. If they open it lower, they've failed the T-line. You're still in a downtrend. The double line is when I tell Jim to do the double line, that's when you can put in your individual stock requests. CMBM, you could buy this one on positive trading, obviously supporting at the T-line. We did Adobe. Let's see. XLP. Don't know what to tell you there. If you're short, you stay short. The financials, nothing yet to tell you there's a turnaround. XLE, nothing there. Still in a downtrend. And XLF, nothing there. If you're short, stay short. Dark belt hold on the ProShare crude oil. Yep, but now remember it's trading up after hours. And we did gold. We can actually do the, so you had that long-legged spinning top doji trading lower. Look for some profit taking. Coin, kind of your piercing signal, double bottom. If you were short, you stay short. If it opens positive tomorrow, you cover it. It needs to open lower to stay short. Freeport bounced right off the 50. I would be a buyer of this one on positive trading. When it was well below the T-line, had a bullish engulfing. Could that be bought with a tight stop? Expectation would be the T-line would act. Oh, if you're aggressive and you saw it gap down here thinking they could bring it back up, yeah. But that would be making you very aggressive. But that was the whole point of recognizing if the market gapped down today, get ready for buying. ConocoPhillips stays short. And run, big bullish engulfing, same scenario. You can buy that on positive trading. You could type percentage in your search window in the bottom left screen bar and see if you can copy all your temps and permanently delete. That helps. You could type percentage temp percentage in your search window in the bottom left screen bar and see if you can copy all your temps and permanently delete. Okay, it's probably not that. It just sometimes my computer acts up late in the day. Let's see, are you looking, for GM? Bullish, whoops, let's see what it does. Kind of your belt hold type signal. I wouldn't be doing anything if I was short. If it opens positive tomorrow, I'd cover the short. Not anything yet. It didn't quite close above the halfway point. So the utilities, you stay short until you get bullish confirmation. To confirm a buy on positive trading, what time frame candle should you use as confirmation? Oh, you don't really need to use a time frame, Mark. You use the visuals of, trying to think of one. Yeah, if I was using this, I'd just look at my daily chart. If I could see they were opening at positive and start trading at positive, that's confirmation. Then if you want to, you can kick to your 10-minute chart and see what they're actually doing. Okay, I'm going to try that. Down here, I'm going to put in percentage, temp, percentage, file folder. These all look like, well, now I can't highlight them. Ah. Well, there's still tons of them. Let's see. $1,000. Wow. Yeah, it's going to take, well, maybe not too long. Skip another one. Well, this might take a while, is right. Sorry about this. I shouldn't do my learning on the... Oh, they're still going. All right. Oh, cancel. All right, I'll have to do that later. Sorry about that. Yeah, then, but there's somebody had to skip. All right. Okay, all right, so tomorrow, need to see how the pre-market futures are looking. I would suspect that the other indexes, if we open positive, now if we open negative and trade lower, this was just an update in a downtrend. All right. Guess we'll call it a night. See everybody bright and early tomorrow morning. All right, the NASDAQ down 137. Wow. Oh, I guess we could find out right here. Down 151. That doesn't make sense. Up. Yeah. That's the Dow. Oh, that's the Dow. I don't know whether I can. No, I don't get the Qs over here. Yep, so we need to see what it does 7 minutes before the market opens. All right, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.